Fullerton, who joins us from Aliom Financial. He's standing by at our studio at the Sydney CBD. Key takeouts for you, Al. What are you feeling about this idea of the US double-dip recession? And there are also fears and certainly a lot of talk about a bond bubble as well, with all the money flowing into treasuries.
Yeah, morning, Brooke. It was another bad night of data flow from the US. Shame Tuesday night we had some positive figures in terms of production, housing construction starts, and there was a glimmer of hope that we might see a bit more positive news flow, and that was obviously brought to an abrupt end last night. What we have to remember, I think, is a US economy being a consumer-driven economy, so 70% of the GDP from consumption there. The general consumer, the mums and dads, aren't overly worried or concerned or look at these three-letter acronyms and the production figures and the PPI and the ISM. But what they do look at and what does drive it home is when the jobless numbers increase or the claims increase. And as we saw, even the top economist was looking for 495, and so 40 economists hit that one wrong. So look, that's what really drives it home, and nothing can hurt consumer confidence and consumer spending more so than worries about the ongoing and the going concern of their jobs.
I know that you feel there will be a recovery in the United States towards the end of the year, but when you're seeing these kind of numbers, at what point do you start to revise your thoughts or look into whether you've got to question that?
No, you do, Brooke, and obviously the trend is starting to set in there. But we saw JP Morgan overnight reduce their growth outlook for Q4 of this year in the US from 3% down to 2%. So it's still obviously in that expansionary territory. We've got the November elections coming up in the US as well. So there are some catalysts going forward which may be able to sort of drive a bit of growth in the US. So I do reiterate, they are in expansionary territory. Yes, the numbers aren't that good. I know that, and they're starting to trend that way. But certainly that expansionary territory and a few key catalysts going ahead, could continue to see the US economy slowly start to improve.
Yeah, but you can say that it's still in expansionary territory, but aren't we worried about the trend here? When you look back at the last couple of quarters, you're seeing a trend where all of those growth figures are coming down substantially. We're 13 months into the recession. Yes, it's in expansionary territory, but it's losing momentum.
Yes, it is losing momentum, but let's just look back over the US reporting season, and there were some real standout results there from a number of companies. So prior to this whole GFC, the companies were highly leveraged. A lot of them had very bad balance sheet structures. At the moment, they're well capitalised there, and we saw that from the reporting season, and we've seen this somewhat from the Aussie reporting season as well. So let's not forget that the corporations are relatively healthy. It's the consumer demand side and the consumption, the spending, which obviously needs to be built up and needs some confidence to return there. So yes, the outlook is uncertain. Yes, there are some headwinds, but the overall outcome of the reporting season in the US was that there are a number of companies there that are in seriously good financial situation and have forecast an uncertain time guidance going forward, but certainly they still feel they can grow in this economy.
All right, let's talk about the reporting season here during the course of the week. We've got the election over the weekend, huge amounts of data to digest from offshore. What have been, I guess, key takeouts for this week for you?
Look, again, Brooke, as we've spoken about, it's all about guidance, and we've seen that AMP yesterday, a prime example, uncertain guidance there. QBE, obviously, sitting there being, we already knew that their profits were off 40%. They flagged that prior to the reporting season, but we saw the stock run well yesterday because they had a slightly more bullish outlook. So it's all about guidance there. This week we have seen certainly some choppy data, but we have seen certain days when we have shrugged off leads from the US and focused domestically. Now today, obviously, we've seen some results there. Billabong Group out. I haven't had a chance to look at their performance, but I heard Julia say the stock was off 10%. They've obviously had some significant headwinds from the US operations there. So today's a good chance there, that we can sort of focus, digest what's happened over the week, and really look at the data there. And I think certainly it's going to be that scenario played out today. That was going to be a bit of a lacklustre, subdued session, especially in light of election weekend, the sun shining. So let's wait and see, but I think it's going to be quite a quiet one.
Okay, and just finally, we've got ANZ's trading update today. What's your view on banks right now? And obviously, as you said, the outlook's important, the commentary is important. Yep. What are you looking for within ANZ's commentary today?
Oh, look, the same as we look for the other banks there in terms of their guidance, in terms of are they going to be looking at increased margin pressures, increased funding pressures, and then certainly reiterating that point going forward. Mortgage holders will want to know whether or not they're going to be increasing rates outside of any RBA moves there. That's certainly something to look at there. But we know that the banks are in a good stead. That they've had some robust profits there, really showing that the Aussie economy is in a good position there. So look, I think ANZ, certainly with their Asian exposure as well, it'll be a solid result there, and obviously their guidance, while cautious, should still be relatively robust.
Thanks so much. Good to hear from you today. Appreciate it.
Thanks, Brooke.
Al Fullerton there from Aliom Financial Markets. And coming up